Hello everyone and welcome. Today we will talk about the balance sheet and we will understand together what is the component of the balance sheet and how we can read it. So the balance sheet considered one of the most important financial statement in accounting because it will help us to understand what is the financial position of the company at specific point of time. So together we will understand what is the component of the balance sheet, what is the difference between assets, liability, and equity, and finally how we can read the balance sheet and analyze the number more effectively. So let's start. So let's start by understanding what is the balance sheet. So the balance sheet is providing a snapshot of the company's financial position at point of time. It will show you what the company owns, what the company owes to other, and how much money has been invested by the owners. One important point that you need to understand is the difference between the balance sheet and the income statement. While the balance sheet focuses on give you the details of financial information about the company at point of time, the income statement will give you details over period of time that will focus on the revenue and expenses to help you to understand what is the profitability of the company. One of the main accounting equation in the balance sheet also that you need to know that assets equal the liability plus equity, which mean that anything the company has in terms of assets is financed through either the liability or by the owners. So let's start with the assets first. So the assets are resources that the company has that provide future economic benefits. Assets has two main components is the current assets and long-term assets. The current assets has all the accounts that expected to be liquidated or converted into cash less than 1 year or within 1 year. However, the long-term assets are the resources that will be liquidated over more than 1 year. Current assets is like cash, account receivable, inventory. However, long-term assets is like fixed assets, machinery, lands, and all of the stuff. Classifying the assets properly into current and non-current, it will help the investor and the manager to evaluate the liquidity and the financial stability of the company. Next, we will discuss about the liability. So the liability also has two main components, is the current liability and long-term liability. Current liability are the money that the company need to pay less than 1 year. However, long-term liability are the liability that the company need to pay over more than 1 year. It's important also to classify the liability into current and non-current that it will help the investor, also the manager, to understand the ability of the company to meet their obligations on time. Now this is a quick example of the balance sheet. So on the left side you will find the assets with the main two components, the current assets and the long-term assets. On the right side you will find the liability, current and non-current, and then the equity or shareholders equity. Always total assets need to equal the liability plus equity. Finally, after we understand what is the balance sheet and all the components, now let's go through how we can read and analyze the number in the balance sheet. So the balance sheet alone, it's not useful unless you will read the balance sheet with other financial statement like the income statement or statement of cash flow. You need also to compare the balance sheet with the previous balance sheet. So to conclude, the balance sheet is one of the main financial statement in accounting that it will help the owners, shareholders, the managers to understand and read the financial position of the company. And by doing this, it will help us to make the right decision on time. Thank you for watching, and if you have any question, please comment and I will try to get back to you as soon as I can. Thank you for watching.